I keep saying, having gold and silver or continue to stack is the way forward, because you can't print and create real things out of thin air.
Yeah, we've got about 4 or 5 years ago, the supply-demand situation went into a deficit. And we're still in a situation, according to the Silver Institute, where the mined supply is less than it was 10 years ago. In other words, the mined supply has been falling year after year consistently, not every year, but more if you look on a 10-year basis, it's down. At the same time, the industrial production usage of silver is rising, and it crossed over where the industrial production or the usage exceeded the mine supply about 5 years ago. And that deficit has been growing wider. Now, the thing which nobody can completely predict is how investors are going to behave. So in the last 5 years, investors have been net sellers. Let's call it recycled silver. So they've been recycling silver to fill the gap. But as the amount of recycled silver becomes less, people become less willing to sell their silver. That's why the price has risen. Now, according to the Silver Institute, they're forecasting record purchases of silver by investors this year. Now, if that does in fact happen, there'll be no spare silver to meet the deficit, because the above ground silver will be actually increasing as people buy that silver, if that forecast is correct. So I think that based on those numbers, which are only speculation, because nobody really knows how investors are going to behave, but if the numbers are correct in the forecast, it does mean that the price of silver has to go higher.
Yeah, and look at this. It was Tavi Costa posted this the other day, or it came out. It's not only him, but China imports most silver ever in March. So, no wonder there's like a premium for silver in China, because I think they have the real physical price there. And the other chart that I think is interesting, Clive, is this. And that's why I'm so bullish. Commodities, not just gold and silver, but all the other commodities, real assets versus financial assets price relative, it's still like near the bottom of the last 100 years. And if you just get let's say 2 or 3% of all financial assets shift over into commodities, the sky is the limit for commodities, because they've produced so much paper assets, haven't they?
I think it will come. I think the money will move into commodities. It's down to the asset managers to decide that they're going to include commodities as part of their asset allocation. The traditional 60-40 allocation continues with most asset managers. A small number are now putting gold in the portfolio, but it's not a large amount. It's relatively small, 1 to maybe 5% in some cases, but the broader commodity sector should get an allocation too. I've flagged a couple of times that gold and silver mining companies are going to be producing relatively high earnings per share increases. So we've just finished the March quarter, so the first results should be coming out now, and that's what we're seeing on that post from that guy saying Newmont have produced the results. But I think there's many more gold and silver mining companies which are going to be producing relatively high earnings per share growth, not only on the quarter by quarter basis, but also if you look, even more so if you look back at what they earned in the same quarter 1 year ago, when the gold and silver prices were much lower. So that type of information, it might take a while for it to be reflected in the share prices, but I do think that we're now seeing the multiples on gold and silver mining companies starting to decline as they bring out these earnings. So every time if they increase the earnings but the share price does not increase, it means your price earnings multiple will fall, which makes it that much more attractive to buyers.
What I think is interesting, though, he says here, is tell me again how the mining sector and sentiment are overcrowded and a bubble, right? He's right, because no one's reacted to this, because no one's watching it, but they're watching Intel. I also saw, Clive, that I think it's here. Where is it? Likes. I think they've cut the margins actually for gold and silver futures overnight, which is interesting, isn't it?
Have they? I thought they were just now a percentage of the underlying contract
No,
value.
they've cut the margins. Yeah, yeah.
Okay.
I saw that come out.
Well, that should in theory boost the price, but I don't think I saw it up today. Have you checked the price recently?
Yeah, I mean, gold and silver are down. I mean, silver is down 80 cents at 74.60, the spot.
Yeah.
Gold is down 5 at $46.7. Yeah, but I'll show you the story here. I've got it here.
I mean, if I'm looking at the chart, it's still to me, in my mind, looks like gold is in a long-term uptrend.
Yeah, the same thing for silver. This is just a consolidation, in my opinion. So here you go. A margin on all four precious metals futures contracts being reduced. Gold 14%, silver 21.4%. And with the world becoming deglobalized now, and China having taken over so many of these critical minerals, and it was partly the West's fault because the West is still focusing, Clive, or maybe it's changing a bit now. They've realized, but it's a little late. We're focused on financialization, credit, consumption, and we've forgotten that. You need real things, even for technology. So I think that's the big play for the next 5-10 years. It's going to be how commodities are going to outperform the financial assets or paper assets.
Well, Mary, I won't be investing in government bonds or any bonds for the foreseeable future because I think the interest rates are way too low. I'll come back to that in a minute, but I'd rather take the view that we're in the next big super cycle for commodities in general. It's not like every commodity is going to go up, but I think if you take a broad basket of commodities, my opinion is we are now in that super cycle, which typically lasts 10 to 15 years at a phase. So for portfolios, I would be moving some of the assets which are equities to at least have exposure to the commodity sector in some way, shape or form. It kind of makes sense. Right. So we'll start with the chart. Whoops.
Yeah.
That's the chart of the US money supply from December 23 to today, until February 2026. Mathematically, that comes to $1.8 trillion of newly printed money in that 2-month period, which is 4.15% increase.
Yeah.
I also looked at the increase in government debt in the same period. That's 4.5 trillion in exactly 2 years, which is 6.44%.
Yeah.
At the same time, we see the financial markets. I looked at gold, S&P, and Bitcoin over 2 years, all up more than 40%. So the question I've got here, Mario, where's the inflation? Is the true inflation in the prices that we're seeing in the shops, which are rising by maybe 3-4% apparently, according to the official numbers? Or is the true inflation in the asset prices? And which one should we be looking at? Should we be looking, if you're measuring your wealth, should you be measuring your wealth against the retail price or the consumer price index? Or should you be measuring your wealth against the asset prices, which are increasing that much faster? Because as you print money, people aren't spending it on bidding up the price of pizzas. They're putting it into financial assets. And of course, you don't need a great deal of money to squeeze up the price of financial assets.
Yeah, I did the same exercise on M2 from the beginning of the year a few weeks ago, and it was growing like at 6 or 7 already this year, year to date. So it's picking up the growth. And this is what most people don't. Unfortunately, people see inflation as rising prices, and that's wrong because the term inflation goes back to when, let's say, the Romans, they inflated the money supply. And how did they do that? Well, they out some of the silver from the coins, and they added base metals. So what that meant, let's say if they took half the silver out, they could produce twice as many coins. So they inflated the money supply by 2. So prices should go up by 2, because the currency, the value, so it goes up by 2, and because people they twig on to the inflation. But nowadays, inflation really is when they just create currency out of thin air. So that's why I think you're right. You need to look at CPI is not really inflation. It's a basket of goods that they doctor, and they measure the price. So I would say right now, if you look at M2, Clive, from the end of last year till now, it's growing at even more than 4.5. It's more like 6 or even 7. That's why I tell people historically the best measure of value and wealth is gold and silver to some extent. M2's grown by 7.5%, Clive, this year.
So it's accelerating. That of course is going to feed through to ultimately the price of things that you need when you retire. People are focusing far too much on the CPI, which is a doctored number. Yeah. It contains, for example, electronic toys and those sort of things, where the price inevitably is going down, but it doesn't. It doesn't. But it masks the fact that as you enter into retirement, you're going to need to spend money on things which are rising in price very rapidly, like medical care or the cost of an old people's home.
Yeah, and also it's not just retired people, but people on lower incomes. The bottom 90% of the people who don't have assets, basic necessities are like a huge proportion, quite a big proportion of their take-home pay, while the very wealthy, they don't care about food prices that much. But yeah, here you can see end of December we're here at 22,386, and now it's like picking up. It will be interesting to see what comes out for March, Clive.
Exactly. We've had the war started at the end of February. We don't have, therefore, any figures which represent what the extra spending in March.
Yeah, and today's the 24th. The war started on the 28th of February. So it's almost 2 months. And I think this war was expected to be a quick thing, a little bit like getting rid of Maduro.
Well, it was so quick. America had won on day 2, according to Mr. Trump.
Yeah, and now I saw yesterday, he said, well, it's not going to take much longer. I mean, it's already 2 months. And the reason why I'm saying that is because the longer it goes on for, the more treasure they waste. And why do I say waste? Well, because in wars, Clive, it's good for the arms manufacturers and stuff.
I mean, think of the cost of having tens of thousands, hundreds of thousands of soldiers and battleships floating around the Middle East, and all the supply chains and everything. It must be terribly, terribly expensive.
Royalties everywhere. They don't limit the geography, and the more diversified you are, the better, I guess, jurisdictionally.